Hello.
Let's try this.
Testing.
All right, you guys hearing better? All right, yeah, this has to be better because I see the desktop audio actually working. Let me turn down my second monitor.
Great.
All right, there we go. Now they said it's too loud because I adjusted the settings. So let me turn them back down and get going here. We're all set now.
Yeah.
All right, let's turn them back down. Turn them down. There we go. All right, let's get them down to an acceptable level here. All right, how's that? Let's see. Give it a little test now.
Testing.
That should be
Testing.
perfect. All right, turn mine back up. Test. Everybody good? Actually, TJ, turn up a bit to be balanced. I turned up. We're all turned up, guys.
Turned up.
All right, there we go. Everyone said we are now perfect. Let me turn the volume down on my second thing. All right, guys, we got all ones. Sorry about that, guys. Thank you for your patience. They weren't going anywhere, Bennett. They're ready for this. All right, so, yeah, Loopy, who would have thought, right? All right, so now we're live. We're good. All right, so again, guys, Bennett from Bitcoin Trading Challenge. Link to the YouTube's in my description. We'll send the links out in the chat, and I'll pull up the YouTube when we're done. So just to get started, guys, this is what we're going to do. Me and Bennett are going to have a conversation. We're looking for your guys' input as well. So if you have any questions on anything that we're talking about or any questions you have in general, send them in the chat. I'll let Bennett know all of the questions, and we'll get to those right away. So just starting out, Bennett, how did you get into crypto? Me personally, I would just want how I got into it. Just wondering, what was the process of you discovering crypto, and a little bit about your journey into, how you found your way into trading.
In 2016, I was like, I'm going to be a professional poker player. I don't care. I'm doing this. I'm going to be a professional poker player. That didn't happen. As you can see, I didn't go that route, but I went a very similar route to where a lot of ex-poker players or current poker players go to, which is markets. I went to Forex in about 2016, and it went terribly. I found that Forex was just near impossible for me to short-term trade. There were so many factors to why these rates rose and fell, and I started to get the theory that a lot of markets tended to move to hurt the most retail speculators, and that's something that I came up with later. So then in 2017, I heard about something called crypto, Bitcoin, and I was like, okay, I'll check that out, and I'll just trade on Gemini for a bit. So I ended up doing something a little wild. It was my freshman summer of college, and I quit the job that I had at the time, which was as a busboy. And I quit that, and I was just like, I'm going to post videos of me trading on YouTube, trading Bitcoin on Gemini. And if you go to the very first videos on my YouTube, you can see me. It's like, hello, traders, with me sounding like I'm 8 years old, turning like $1,000 into some higher amount on Gemini. But the most interesting thing is that Bitcoin at the time was in the 3-figure range. So I really regret my old self not buying more Bitcoin when it was like $800. It's just crazy to think about that. So I started with that. And then I began to adapt this philosophy that markets tend to move to places of most pain of most retail traders and speculators. And from that, I started to write some books and guides just showing my findings about what works and what doesn't work. And here I am today, trading and teaching and traveling.
Nice. So what was your first, what was the process when you first got in? Like for me, I had YouTube and Google. I didn't know about Discords. I didn't know about Telegrams or anything like that. I just had a crappy old laptop, and I just decided I wanted to trade. I mean, there's a little bit more of a story there. We'll talk about that later maybe. But where did you start? Where did you start to say, okay, I want to learn technical analysis? What was the process for you? What were the influences for you starting out?
Yeah, I carried a lot of things that I learned in Forex, like technical indicators, and I started out with using RSI, which is, I think, the indicator that everyone uses, basically. I would say it's in the top 3 most popular technical indicators of all time. I started with that, and then I gravitated toward price action volume because I got to a point where I was losing money, and I was like, all right, I'm going to try just price action volume and just go from there. And I actually started to make money because I was using less indicators and I was using more of an actual analysis. And that's really what started me thinking about, how can I do this differently? Because I knew that if I just followed the route that everyone else followed, which is, hey, let's use some technical indicators like RSI, I would get results that everyone else gets. So I started to adapt a different kind of mindset with approaching the markets. And that's really where LRA, locked in range analysis, and sentiment analysis really began. I wanted to do something different, and I wanted to find a way to profit from the losses of other traders. So that was the beginning of me changing my strategy.
Absolutely. We got real quick. Nico's coming into the chat now too. I just had to accept him into the chat. Awesome.
Hola.
So it ended up being. Hold on, let me mute him here. All right, Nico, you on the call?
Yeah. Hi guys. What's
How
up?
you doing? Good. We're just here with Bennett now. Welcome to the chat. So just going into a little bit of the background of how he got into crypto. The step-by-step stuff that we all basically go through in our learning process from heavily relying on indicators into more into price action analysis. Do you have any questions as well, Nico, for Bennett here?
For now, I don't know.
Oh, I can't.
Maybe when
your volume's real low too,
when we
Bennett.
chat.
Nico.
Yeah.
There you go. Getting better. Lots of people in the chat too. Welcome everybody for the stream. If I didn't say what's up to you guys, thank you for coming to the stream. Again, we have Bennett here from Bitcoin Trading Challenge. Nico just joining the chat as well. So, do you want to go into a little bit of a little strategy comparison here? And talk about some of the things that we both use for as far as trading. We'll do some screen share stuff.
Sure. So I can begin with, okay, your entire screen. Okay. And you should be able to see that.
Let's see.
So
Take a second
let me know when
to
you can
load
see it.
Yeah.
There we go. Presentation starting.
Ah.
Yeah, everybody said, let's talk LRA.
It all started with Mr. Lexi, Tom Lexi. I came across this PDF that I think a lot of people have now read about locked-in range analysis, which was Tom's way of describing how markets move and how most traders are going to lose money in the markets. So I read this cover to cover multiple times. I even made videos on it. And because of this, I actually adapted it into crypto. So what I did was I created an entire course that took cryptocurrency indicators and the LRA analysis from Tom, combined them, and just see what we can do in the markets. What I found is that it worked pretty well. So basically, the basics of LRA is we know that markets tend to move, especially Bitcoin, to the path of most pain. And if you don't believe me, just look at this candle here. Now, I mean, this is, come on. This is the definition of pain. When you look it up, you get something like that for short-term derivative traders, for sure.
Absolutely, yes.
Markets tend to move to the paths of most pain. So I was thinking to myself, how can I make the most money from that? Well, you want to make money from other people's losses, and by doing that, you need to really understand, how people lose money. So one pretty important concept of LRA that I talk about here, that Tom talks about, and that the markets show a lot, is the trap trader principle. This is when positions are rising, meaning that longs and shorts are entering into positions. And then out of nowhere, the market jumps up or jumps down and begins to trend. Now, one of those sides tends to be, in profit, and then the other side is losing. But what Bitcoin tends to do is that Bitcoin can trend very hard and very rapidly. And the reason that it can do that is because of trap traders. So I'm going to give you guys just a quick live example, like right away. So I think this one is a very, very good example. And I'm even going to do a little annotation to show you guys what's going on here. Look at this locked in range. Look at this consolidation phase. Now, I would call this a locked in range because what we see is we see a pretty steady increase in open interest. And the actual increase we see is about 120 million, 110, 120 million US dollars. What this means, guys, for those who don't know, what open interest is and what we're looking at, this means that at this point, there were 120 million US dollars worth of longs and 120 million US dollars worth of shorts. Okay. Now, what you'll see is price has a near impossible time trying to get past this point. You may wonder why. Well, anyone who had bought in this range and is still alive is probably going to be very inclined to sell. And that's what can create resistance. So what happened here is you can see price went up, price went up here, and then as you can see with open interest, people began closing positions, signified by kind of the fall and the stagnation of open interest. This is the break-even principle, and it actually happened a third time too. Price wasn't even able to go past this point because so many traders had been trapped here. So what I do with LRA and what I teach is we look for points of very high trader concentration. So we're looking for points where a lot of traders have just entered into the market. And we know that if price goes past that point, that it's going to create a natural resistance or a natural support zone. If price falls, it's going to be resistance, and if price rises, above it, then it's going to be support. So that is the trap trader principle, and something that I talk a fair amount about. There are other parts of LRA that I can talk about too, but oops, I don't know how that happened. There are other parts of LRA that I can talk about too, but I just wanted to start with that one because I don't want to talk for like half an hour without any input. That's the first concept, and for sure the most important concept for me. But do you guys have any questions, or do you want me to just give you another one? Another little
Yeah, guys,
concept?
if you have any questions as we're going along, please put them in the chat. And yes, I will continue to mute my mic. I got the kids home, so they came running in the living room. I was about to run in there and kick their butts. But if you guys have any questions, so let me look back in the chat. I'll keep looking back in the chat too. A lot of new people in the chat today as well.
Yeah.
Please ask in the chat. I'll relay this to Bennett, and then we'll get into we'll talk about both of our strategies, maybe how we can use both together. Let's see what we got. Someone's asking about time frame. So right off the bat, asking about, you have it on the 5-minute time frame. Is this the time frame that you're looking for? Generally, do you have a specific time frame you use this for? Or does it work for all of them?
Okay. Time frame. Well, again, I'm going to start off with the most generic answer to any question. It depends. It depends is always
Of course.
the answer to 95% of questions out there. For me, I'm a more short-term and medium-term trader. And because of that, I use the 5-minute. I also find that this just works better for me on the 5-minute. That doesn't mean it's going to work better for you. What we can also do is take a look at the 1 hour. And patterns become a lot more clear, but a little bit slower. So what I find is that looking for trap traders is typically a lot easier on the 5-minute, but I can do a little bit of it on the 1 hour as well. But I don't really think larger time frames work as well with this. It's more for me of a shorter, time frame thing. So that's my answer to that question.
Yeah, I agree too. I use the 1 minute basically for all my. I use the 15-minute for context, and the 1 minute to really understand what's going on in the trade. To progress the trade.
I like having a lot more data. I like having a lot more data that's recent instead of looking all the way back. This can be good every now and then, but I just find the 5 minutes a lot more relevant and easier to trade.
Yeah, for me, watching the higher turn time frames, like watching paint dry for me now that I've mastered the lower time frames.
Yeah.
Someone else is asking, I'm sure they're just right on TradingView, but what indicator are you using specifically for longs and short and open interest on TradingView?
Sure.
And the other question was similar.
This is not TradingView. This is trdr.io, so it's trader.io. You can see it in the top part of my screen. A lot of people think it's TradingView, but it's actually a paid site called Trader. And on this site is also where I have my LRA course, which is in the Academy section right there. So you can't get this on TradingView, unfortunately, but you can get open interest data on other sites like bybt.com or on coinalyze.com as well. Those two websites you can get open interest. What I want to talk about is just show you guys what these indicators are and why they're important for my analysis of the market. This is long shorts on Binance futures. So what this shows us, first of all, if there's an open interest of 1 million on Bitcoin on Binance futures, that means that there's $1 million US worth of longs and $1 million US worth of shorts. However, the long percent can actually be not 50%. And what that means is how many accounts are net long. So just because there's 1 million contracts long and 1 million contracts short doesn't necessarily mean that half the population is long and the other half is short, because maybe one side has positions 2 times the size of the other side. So what that means is when this gets something to, like, let's say really, really low, like right around here, to 40, what was it, like 48% right down here, 0.48. That means that 48% of accounts on Binance Futures were long and 52% of accounts on Binance Futures were short. Now, what I find most important with this isn't the number, it's the trend. So what you always want to look for, and I think I show it a few times here. Oh yeah, this one's pretty perfect right there. And this one too, the trend. So as you can see in this little picture here, which is part of the course, we can see two things that are pretty clear. We can see the long percent decreasing and open interest increasing. Well, what does this tell me? Well, long percent decreasing means that there are more people shorting. There are more short accounts coming in. So price is increasing, we see shorts increasing, and we also see open interest increasing. That means that there's more positions now on Bitcoin, and there are more shorts. So what's likely to happen next? A short squeeze, and a short squeeze next did happen. So that's something you always want to look out for, is how is sentiment, long percent sentiment, trending as price trends. And I'm going to give you guys, you're right. This was a great buying signal right here. This is something that I look out for intraday, where price is rising, open interest is rising, and long percent is falling. Because guys, when you see this and you're like, okay, where is price going to go? What this is telling me is that the shorts are the suckers right here. People are progressively shorting more and more and more. And as more shorts come in, it's more fuel for the fire. And that's something that I like to call the loss cycle. There are cycles of loss in markets. And yep, here we go, loss cycle. And you want to find a way to position yourself so that you're taking advantage of the loss cycle. So if you see this, if you see a lot of shorts piling on, a lot of traders would say, oh, the price is too high right here. But you know, a better trader now who knows locked in range analysis and who knows how to take advantage of other traders, you can see this and then maybe look at buying call options or buying spot or buying a low leverage futures contract. And, you know, price definitely went higher and price continued to go higher, you know, until, look at this. Now what we saw is this increased a little bit. So that is a little read into how I look at long shorts. But I know a lot of people say, hey, if you could only have one indicator, open interest or long shorts, I would take open interest any day, because open interest tells you how many new positions are coming in and how many positions are leaving. And the easiest way to use open interest is to look for major drops in open interest and then bet on a market reversal. So basically, an example of that would be something like this, where open interest massively dropped on that up move. That's a really bad sign. That's a sign that people are closing out positions. This would have been a probably not too bad time to buy puts or to short. And then we can see open interest drops even after this fall, and then that reversed. But that's a little quick primer into just like 10% of what locked in range analysis is. What I've showed you guys so far is a lot more of the technical, what you can see. But what I also like to talk about is also the theoretical part, because I think that I can show you all these indicators and I can show you how to use them, but you really have to know how to understand the theory behind this. And the main theory is that we're always looking for who's on the losing side. Right now, are there more longs that are on the losing side, or are there more shorts that are on the losing side? And fortunately, it looks like the longs are kind of being the suckers right here, with this kind of pattern. But, you know, we'll see. I think it's likely we're going to flush out some people at least below 47,000. I think that's decently likely. We have multiple bottoms here. You know, price falling below 47K. I think the probability of that is up there. But notice that I said the probability, because there's no guarantee that price will fall, because there is an element of randomness in markets. It's just that I try to best take advantage of that element of randomness by betting on other traders losing money. And I think that the most pain that can happen for sure is for price to go down, open interest to fall a little bit more, and then price to slowly pick back up. So wouldn't be too shocked at that. Any questions on long percent on open interest, or best on loss cycles and on locked in range analysis? Does anyone?
One of the questions they had in the previous, well, not slide, but the previous graph you were showing, chart you were showing, is that similar to divergence, basically, that people use in other ways that you were showing there? with the open interest or the net shorts rising while price isn't, similar to a divergence?
Do you mean?
I think it was a
oh,
couple
you mean
slides
in the-
back.
Yeah, well, in my paid course, yeah, like all the way up to the. Watch someone watch this video back and then be pausing it like constantly. So
Yeah,
they get free
right.
access. that'd be funny. Yeah, so I wouldn't exactly calling it divergence, because divergence, I think about RSI. I would just say who's on the winning side, who's on the losing side. What do we see here, guys? Instead of thinking about convergence or divergence, what I see is price rising, positions rising, signified by open interest increasing the bottom chart, and long percent rising. That's a very scary sign, because that means there are more longs, and think about it like fuel in the fire. If open interest rises, that means that there's more, meat's back on the menu, as the goes. Because the higher that open interest gets, the more the more positions that are out there, the more liquidity, so the more pain that can be caused. And if you see the long percent increasing, indicating that a lot of people are buying, this is what tends to happen. So think about it that way. Think about our longs coming in, our shorts coming in, and instead of thinking about convergence and divergence, I think you'll do a lot better that way.
Yeah.
Yeah,
It's
and they were
nice to
asking
have those
also.
longs and shorts.
Oh, sorry, Nico. Go ahead.
No, just some people only look at open interest, but yeah, those long and shorts are nice to have, so you can see what's actually happening in those
Yeah.
open interest. Are they squeezing? Are longs coming in, or are shorts coming in? And that's, I mean, if you're pushing up and more shorts coming in than longs, open interest going up, that's actually healthy for the move. So, I mean, it will just continue to squeeze. But if you get a smaller amount of shorts opening and just longs opening, that's then your theory, what you showed before. Then
Yeah.
the drop happens. So you must, I mean, it's how you look at it. The open interest, are there longs, are there shorts? Yeah, that's also some
Yeah,
stuff.
and one like really important note I think I have to say to everyone here, it's really important that the majority of your LRA is done on Bitcoin. I know that might seem a little bit strange, but if you're trading something like Doge, BSV or whatever, Ethereum, a lot of these are intercorrelated, as you guys know, and because of that, the best LRA, the best analysis you can get is on Bitcoin, because if Bitcoin's bullish but Doge is just super bearish and Bitcoin pumps, what do we think Doge is going to do?
Yeah.
So in that case, it's going to pump. Yeah. In that case, guys, it's super important that if you're going to analyze, let's say FTT, you first do an LRA analysis of Bitcoin, then you do FTT. So with an altcoin, you should be doing two. If it's just Bitcoin, obviously you just do Bitcoin, but you always need to remember correlation. Correlation is something that took me a few years to understand, but in some ways it even trumps other indicators, because when Bitcoin is doing a crazy move lower, lots of altcoins will very likely fall. So you do need to remember that. So that's one important note that I want you guys to remember.
Couple more questions in here. One was somebody talking about, we know that some exchanges have different open interests and stuff, obviously, because there's different stuff going on in each exchange. Is there a recommendation to use, because there's not really a lot of aggregated data for that out there?
This is
aggregated on this site?
Yep.
Okay. All right. Well, there you go, guys. So on this particular
Bitcoin.
platform, the data, you do get aggregated data, so you don't have to pick and choose between the exchanges and try to get which one's best.
This is everything. This is perpetuals, futures contracts on these 7 exchanges. So that's why we're at 7.6 billion contracts. So this is going to give you a lot of information on what's going on. And all I did to change this is I just eliminated the wicks. I mean, you can have the wicks on, but for this analysis, I just turned them off. So that's how you get it on trader.io.
We had another question too. Let me find it real quick for you. I know another person asked about if you can use open interest and stuff. Like we kind of talked about the divergence thing. They asked if you can use things like that to identify divergences and possible price action. But I think you pretty much covered, your thoughts on the divergence stuff.
Yeah, just put into context. Don't think about convergence and divergence. Just say, are longs getting slaughtered? Are longs getting piled on this fire? Think in context of people, not on patterns. That's my advice for that.
Context, everything.
And someone's asked, so if open interest is going up, it's more likely for it to drop. That's not, it's not across the board flat answers for this data.
Well, there is one thing that I think I can give a little bit of alpha out. When open interest tends to rise, volatility tends to rise as well. That's a lot more important than you might think for those who trade options. When you guys see open interest is getting very, very high, and this doesn't even have to do with LRA. This just has to do with options pricing. What you can do to take advantage of a very high open interest is if we go back in time to something like, this, when open interest was really, really high. I mean, this is an all-time high for open interest right here. Almost 10 billion contracts. So this is insane. If you had bought, a straddle, which is basically betting on volatility, or even buying a move contract, a weekly or a quarterly move contract, you would have made a killing likely because volatility increased. So whenever open interest is very, very high, think about it like there's more fuel to the fire. If a move is to happen, it's going to hurt a lot of people. So that's one thing that you should think of. When open interest is low, volatility tends to be lower. And when open interest is high, volatility and trending begins to get very, very strong. And there are two reasons for that. One is just more people, which means more people to liquidate, more people to stop out. The second reason is if something like this happens, I wanted to show this during it, where open interest was really, really high at this market top, and then we got this sustained downtrend. It actually lasted like quite some time. It lasted, like a few weeks of a downtrend. What happened here is that we have so much buildup of positions that you can see it just slowly getting released. And this isn't like a violent move upward or violent move downward, but when open interest is very, very high, that can actually begin a trend. So that's another thing that I want you guys to think of. Basically, long story short, pun not intended, when open interest is very, very high, bet on volatility. And when open interest is kind of low, like around like here, the price doesn't really tend to go to anywhere. So that's another little alpha leak I can give you guys.
Another question was, how do you keep track of, and we can segue this into also about, adapting to losses. Like how do you keep track of profitability for this strategy or any strategy? How do you track profitability and consistency? Is there that's the question they're asking for either strategy or any strategy.
Well, it's actually kind of harder than you think because not every strategy is going to be stop loss take profit. Something like arbitrage, it's not stop loss take profit the majority of the time. Options trading, a lot of buying options is not stop loss take profit, at least not the options that I do, because kind of the point why I like to purchase options is because I can't get stopped out. So it's kind of hard for me to say profitability, but I can tell you that I wouldn't be doing it if it wasn't profitable. I would have just gone back to, technical indicators. So for me, this works, but I think that it is very, very important selecting the instrument that you trade it with. Instrument being, do you do spot trading, futures perpetual trading, or do you do options trading, move contract trading? I think that for a beginner, the worst thing to do is futures and perpetuals trading. I think that if you try to do that as a beginner, you're probably going to get liquidated or pile onto losses pretty quickly, and you're going to end up just being another guy who I'm betting against on this chart, with the loss cycle. I think that leverage tokens in the very short term can be pretty nice. FTX leverage tokens that are 3x leveraged, just holding them for a long time is suicide, but short term. And then also buying options on Deribit. That I think is a pretty dominant strategy. And also buying spot. If you trade spot, if you trade medium term options and you do this, I think that you are so far ahead of the trader who just reacts on impulse on derivative markets with futures and perpetuals. So with instrument selection, you might notice that I picked spot and I picked leverage tokens and I picked options, because the three of those you don't always need to use a stop loss, because on the three of those you can't get liquidated, because when you buy options you cannot be liquidated. Only when you short options can you be liquidated. So pick markets that you can't have a total loss on. And then after that, I tend to prefer to not use a stop loss. So that's why I adapted my markets to be such. That was a really long-winded answer about from profitability, but I hoped it helped some people out who are like, okay, I now know the theory. How do I put into practice? Well, I just told you, pick one of those three routes: spot, options, or leverage tokens in the short term.
I mean, it makes sense. It's all ties back to risk reward and risk management and things of that nature. Especially for new traders that come in, like you said, they run right to high leverage, high leverage exchanges. They see 125x and I can trade with $100,000, and before you know it, they don't realize they can lose it just as quick. Someone else asking. This is out of my realm, so this is all you on this one. Where is it?
Hit me.
Given the similarities of a straddle or a strangle to a move contract, what would be your preference and why?
Okay, guys. So by answering this question, I am going to alienate some of the audience. But what I recommend you do before I talk about this, go look up what options are. Shameless plug, but I actually created a course based on options, which teaches how to use them in crypto. Now, to answer your question, what I would do is I would look at the implied volatility of the move contract and how long that move contract is, and then just compare it to the implied volatility of Deribit. So if we have, a call and a put at the same price that expires around the same time that a move contract does, and it's at 80% IV, and the fee structure is lower, let's say, and let's say FTX is like 100% IV, then I'm going to pick the 80% one. So I think that the easiest thing for you when, hey, do I pick the move contract? Hey, do I pick Deribit options? You just go with a lower implied volatility and you account for fees. I can get more technical with that, but for me, that's my main differentiator. And I think that Deribit is probably a little bit better because at times move contracts on FTX can be really illiquid, especially the quarterly, and sometimes the weekly contracts can be very illiquid. So Deribit is probably a little better for that. So that's the options question.
Yeah, it's cool. People tell me I should get into options too. I just haven't had the time to really dive into it. So it's cool you brought it up.
Have you touched any move contracts like on FTX, the volatility contracts?
No, all I've ever done is Bybit, Binance. I started with Coinbase, obviously, and then I wanted to trade something that wasn't on Coinbase. I was just spot. All I did was trade spot, and I just converted one coin to another. I didn't know anything about cycles or anything, so price just kept going up, and I thought I was like the Warren Buffett of Coinbase conversions, and made a ton of money just holding and converting, even though everything was going up. I just didn't realize what was going on. And then I wanted Cardano that wasn't on Coinbase at the time, so I found out how to, the VPN and Binance and that. And that's how I found out about the leverage accounts and stuff, and quickly lost all my spot account basically trying to learn. But that's all I've ever done now is just the leverage trading. I haven't really had time to devote to learning an entire new thing. And then the channel came about, so I am definitely interested in it. A lot of people tell me the way I trade and recognize price action and hedging and things of that nature, I don't know why, but it would for some reason be good with options. So I am looking to get into it. So I'm glad you brought it up, Tim. I'm definitely going to start doing my research on that.
Yeah, I recommend everyone who's watching this, do as much research as you can, not always about strategies, but about different instruments that you can use. So options, leverage tokens that I mentioned, go Google that. Move contracts, which are basically a straddle, spot, futures, derivatives, hedging, arbitrage. All these things are so important to know, because then you're going to be able to see something and say, I'm going to use options for that. Or I'm going to see something and say, hey, I'm going to use leverage tokens. Because I've learned so much, so many different things that I can do, I know what to adapt. And I know when to go to arbitrage and when to go more toward scalping, if that makes sense. So learn as much as you can. And I'll tell you, losses can sometimes be your best tuition. Like you said, with losing your spot account, that's happened to me a few times too on BitMEX. and Binance futures. It's happened to all of us, but it's the tuition you pay to the markets. And after I had lost a few times, that's why I came up with my course for locked in range analysis for this, because I wanted to find a way to teach people how to take advantage of others who are losing their accounts. So that's why I'm here.
Nice, nice. Let me see a couple more questions for you. I know somebody wanted to see. I know we're running a little bit long here for you, but I'm waiting for another question to be posted. I can't find the chat, but somebody else asked it if they could get a couple more examples of combining all of the major TRDR indicators like previous liquidations, long and short open interest, long versus short volume delta being used together to do analysis. A couple people just wanted to see a couple more quick examples of how you use them together, if that's possible.
Yeah, the reason I didn't want to go into that is because it would just get too cluttery, and I would alienate kind of the audience because there'd be like 5 indicators.
Yeah, right. That's what I figured too.
Work well. I mean, I could add a lot more. I'll throw in one more guy. I'll throw in funding rate. It's kind of an ugly representation of funding rate, though. Let's do. How about you? Perfect. And yeah, so let me just explain our two newcomers here, our 2 new indicators. This is aggregated liquidations on all these different markets on spot and perpetuals and futures and spot margin. Now, when this is very, very red, let me show you guys here. Shorts are being liquidated, and when this is very, very green, that means that longs are being liquidated. So typically, what tends to happen with liquidations is you go from lick to lick, so liquidation to liquidation. When the shorts get liquidated, typically the market then moves to liquidate the longs, and when the longs get liquidated, price tends to then liquidate the shorts. A beautiful example of that is this kind of trickery that Bitcoin recently did that hurt a fair amount of people, where Bitcoin shot up and then shot down. And what we can see is that you liquidated the shorts and then the longs. Now, the bottom indicator we have is the funding rate. The funding rate is a little bit more complicated, but it's based on the price difference between perpetuals and the spot market. So when this is very, very green, that means that perpetuals are trading higher than the spot market, which means that traders are basically betting that in the future that the market will rise. When the funding rate is very negative, that means that the perpetual market is trading below the spot market, which means that traders who are trading futures believe that the market's going to fall. Now, the easiest strategy you can do with the funding rate, if you want to just ignore everything I said, is basically I find it bullish when the funding rate is red, when it's negative, and it's bearish when the funding rate is positive. This isn't the best indicator of all time. It's definitely something that you can use from time to time, but it's not the holy grail by any sense. But I do prefer to buy when it's very, very red, because this is implying a very, very negative bias. So something like this, I mean, this was just okay, but typically green means a bullish bias and red means a bearish bias. So, better to buy in red and sell in green, although it's not, like the most reliable indicator of all time. It is nice. Those are these 4 indicators. Now for analysis of it all together, we can go in the 1 hour and show it. So an example of, there's a lot to pick from here, but the most obvious one I think is for sure what happened here. So the funding rate goes very, very negative, which to me is bullish. Lots of liquidations of longs, which again is quite bullish. Large open interest drop, which again is quite bullish. The only thing that I did not like about this is you guys can see long percent went from about 50% to like 67%. What this is indicating is longs got killed, i.e. why we have a lot of liquidations of longs and open interest fall. A lot of traders are betting on the market falling lower, i.e. the funding rate being very negative. But a lot of people are positioned long, right? See this increase in the longs. So the unfortunate thing was, because we had such an increase in longs, they didn't really give up. The market kind of went a little bit lower to shake out those longs. So this is, I think, an example of, even though 3 out of the 4 indicators were in our favor for buying, you can see that the market still went lower because it had to flush out these longs. This is the exact kind of analysis that I would be doing normally using these 4 indicators right now. Now, right now, what I see is, again, I see that the market believes that this is a little bit bullish, which makes me think it's bearish. Open interest is falling and long percent is increasing. That's indicating to me that this isn't good. I mean, I think the price is probably going to fall below 47K, especially with this kind of price formation. This basically means that traders are exiting the market and that longs are entering and that shorts are exiting. Because if this is rising and this is falling, that typically means that shorts are exiting because open interest falling and this rising would indicate shorts exiting. So I would assume that price is going to go a little bit lower. So that is a little bit of my analysis. But again, remember that the most important part of this analysis isn't the indicators. It's just figuring out who's on the side who's about to get, destroyed, and then positioning yourself on the other side. That's the most important part. That's why I use all these indicators, is to try to tell me who can I take advantage of here. Are we going to take advantage of the longs soon, or are we going to take advantage of the shorts? And then once I determine, like let's say here, I think that okay, price is probably going to rise soon. I don't buy futures. I don't buy perpetuals. I will buy an options contract, so that even if price falls and then price rises, I still make a fair amount of money. Because if I buy a call option here, I don't care that the price falls. Because if the price goes right back up and there's still life on that contract, I'm deep in profit anyway. So that's my strategy. But even in a shakeout, you can still make money because you're using options.
This is my personal question. It's on the chat, but what just because I'm more, you got me more interested in options and things of that nature. What is? I mean, I don't know if you have a set thing. I'm sure it's pretty liquid in the percentages, but what is your the trading percentages that you do? Account relatable to between spot. Spot accounts, derivatives, options, leverage. What is do you lean more towards one or the other? Is it just however the charts lay it out for you?
Oh, 3/4 of my portfolio is in spot. Yeah.
Okay.
75% of my money is just literally long Bitcoin. And a lot of people say to me, why don't you diversify? Well, everything's so intercorrelated that if Bitcoin falls, other things are going to fall anyway. So, and then if you're like, okay, but what if you buy this non-diversified coin or this coin that's not correlated to Bitcoin, and it's like some low market cap coin that will probably go to zero? The thing is, most major coins are going to be correlated to Bitcoin, so that's why 75% of my portfolio is in Bitcoin. And then I do a little bit of arbitrage with that Bitcoin, if that makes sense. So if I see an arbitrage possibility, I deploy that Bitcoin from my spot account and do arbitrage. The 25% is for options and leverage tokens and FTX stuff. So
you're not just sitting on the charts during the day and on Bybit or Binance or whatever and leverage trading moves anymore. You're used to, and now you transition to something to more evolved into the options and stuff, or is that just you grew out of it?
If I'm doing short term, I actually recorded myself trading leverage tokens live. If it's short term, I would probably just want to trade leverage tokens without a stop loss. So leverage tokens are 3 times levered tokens on FTX and on Binance futures. And they allow you to be 3x short or 3x long without a liquidation. The issue with leverage tokens is the more time that goes by, the more that these leverage tokens just devalue. But in the short term, they can be pretty good because the fees are pretty low and they're really easy and typically pretty liquid with the major leverage tokens. So I don't know if you've ever touched those on FTX or Binance, but they're pretty nice for short-term moves.
I think I used to see that they're just set 3x tokens, right? So you're not actually choosing your leverage on the actual futures exchange.
No. It's like just if you're trading Doge and Doge moves up 5%, it moves up 15% if you go
I'll look into that.
Long on Doge Bull. Yeah. And that
less
way,
risk as well then.
Well, it's 3x leverage, so there's going to be 3 times gains, 3 times losses. But because there's no liquidation chance, you're never going to lose all your money. But the issue, though, that I do want to show you guys is, and I wonder if it's on here. Oh, they don't have the. Oh yeah, here it is. So this is actually the leverage token that I was talking about, and I can show you guys that. The issue with leverage tokens, though, is that look at this massive devaluing. This is not a chart of, this is a 3 times leverage token of Bitcoin, but you can see that price has fallen like a massive amount, like 94% from its ATA, from its all-time high. So these are something you want to trade short term. Be careful holding them long term. So that's a little primer on that instrument for.
Yeah, I have to look into that. Someone else asked how many, on average, I know they ask me that all the time, and it's different because of the price action, but about how many trades or do you take a day? I know it's different because you're doing options and stuff like that too, but are you trading
It's so
every day?
infinite.
Definitely.
No, I mean, because it depends on arbitrage. Because typically, let's say that I I see a really good setup for LRA in the short term, like on the 5 minute. So I'm looking here and I'm like, hey, I think it's moderately likely that the market's probably going to move lower. How about we buy a 3x leverage short, called Bear USD on FTX, so that if Bitcoin falls 2%, I make 6%.
Okay.
If I put 100K on that, I can make $6,000. Cool. And that's something I will do. But I will say my default is typically arbitrage, because I do find market psychology interesting. But
Absolutely.
arbitrage for me has just always been my love. And it is something that can be pretty complex. But once you really understand it, it's something you can kind of find anywhere. So that's kind of my main go-to.
Yeah. Also, what was the question? What percentage of your portfolio do you have a set thing? Like for me, I only do the leverage trading, so I only use 25% of my trading account, which is only 10% of my whole portfolio of assets. Do you have your own little rules, or does it depend on the opportunity
Yeah.
you see?
Oh, yeah. I definitely. I used to think like, oh, these rules are kind of silly, and they're not. They're so
No,
helpful.
I used to do the same.
Yeah, they're really good rules to have. And the 1% rule for me is pretty good. I know it seems like it's pretty conservative, but recently in my trading, I have been just looking for low risk, high reward, and that's kind of why I do options. But for me, it's always 1% of portfolio. So when I say portfolio, I have my 75% in Bitcoin and my 25% in derivatives. But let's say that entire number is like 100 units of something, whatever, or I would only want to lose 1 unit, if that makes sense. So whatever
Yep.
percentage loss that is on your individual trade, I don't know, but 1% of portfolio is always my rule, and it's just so much better now. So use those rules; they will save you. Hopefully, you'll be making enough right trades where you won't have to deal with too many of those, but they happen to everyone. And the smart and emotionally sound trader can take that 1% loss. And the silly trader, or the trader I used to be, takes a 85% loss. So take the 1% loss.
Yeah, I do the same. I try to tell these guys the same thing to have those rules in place, especially about risk reward. And I get really good entries and stuff, and make really good trades every day pretty much, and I'm very consistent. And they're like, why don't you just use like 100x with $150,000? Because I use a very small portion of my portfolio, like I said, like 10K, 25% of that, and then every week whatever's over that, I put it into my spot account and then start again with the same thing. But again, like you said, it's about trading. So it's psychology too. When the numbers are bigger, the fear and greed kicks in more as well. It's about once you build up your account and you can make consistent gains with with smaller amounts compared to your entire portfolio, it starts to add up.
Yeah, and like let's say you have $500,000, then for me, if I'm looking at, I hate to use options again because you haven't jumped upon the bandwagon yet, but I think you'll understand this. First of all, a call option means that we're betting on the market rising if we purchase one. A put option, if we purchase it, means that we're betting on the market falling. Now, if I purchase a call option, you can't lose more than the premium, the price you paid for the option. So if I have an option that expires in 1 month, and I have a limit, I would say I don't want to spend more than $5,000 on it, because that's 1% of 500K. That way, if the market falls, I don't feel that like pain of like, oh my God, I'm losing so much money. I don't, because I'm like,
Exactly.
it's just 1% of the portfolio. And then, if the market rises and you're up like $8,000-9,000, you're not like, oh, I got to take profit now without even looking at your analysis, because you're just following your rules. So the 1% putting into an options premium that's medium term dated and using good LRA, that's really my closest to a holy grail that I can find, and trying to find low implied volatility too.
Yeah.
Cheaper options.
Yeah, somebody asked, I know we're getting a little close to time here. This is probably a more advanced question as well. Someone's asking if you could talk a little bit more about what sort of arbitrage he is doing, that you're doing. I don't know what that means, because I don't know anything about it yet, so I'm sure it's a little complex to answer.
Great question. Great question. I'm actually creating a course on arbitrage where I'm teaching all the ways to spot arbitrage and just giving a lot of arbitrage away in a course. But enough of my plug. That course will come out soon. Hope a lot of you guys will get it. Arbitrage is using the most basic form of arbitrage would be this. I'm going to give you guys a free arbitrage strategy to illustrate my point. Whenever markets are in free fall, arbitrage opportunities are amazing. There's probably nothing better, no better risk reward you will ever get than an arbitrage opportunity when Bitcoin falls $10,000. How do you arbitrage? Let's say we're looking at, and this is a real example, let's say we're looking at Bitfinex and Coinbase. There was a point on the recent drop where Bitfinex was 6% higher than Coinbase. What that means is that we can buy on Coinbase and then sell on Bitfinex. But you might say, hey, but exchanges are down. I might not be able to withdraw or to send. Well, there is something that you can do. If we know that Coinbase is 6% lower than the entire market, here's what you can do. You can purchase Bitcoin on Coinbase and then short Bitcoin on another exchange if you're shorting 6% higher. And then when markets come back to parity or markets come back to equality, you can close that short and close that long, and you gain the 6% spread. So
Wow.
arbitrage, like at its most basic sense, is when I purchase something, send it to another exchange, and then sell that for a greater value due to arbitrage. If Ethereum's at 100 and it's trading at 102 over there, I can send it there and sell it at 102. But we don't always have the ability to do that because exchanges go down. There are KYC rules. So what you can do if markets are in free fall is you buy on the cheaper exchange and then you short or use a leveraged product that is the same amount, but you're just short on the other exchange. And then when those two markets become equal, you close both. And then you can pick up an arbitrage profit. That's one of the greatest ways you can make money in a market free fall right there.
I got a lot of homework to do. A lot of stuff. I'm endlessly fascinated by the markets, as I'm sure obviously you are as well. You've been in a lot longer than me, but already every day I'm just trying to find something new to learn. And again, for me, it's I hope everybody gets to the level 2 where they can say they're kind of bored trading. But just doing the regular trading like I'm doing every day is, I'm making money and I don't have to work. My girlfriend doesn't have to work, so it's working. But I'm looking for more. I'm trying to get something deeper, more longer term than sitting on the computer for 16 hours a day and trading up and down on the 15-minute time frame, 20, 15, 10, 12% all day long. As rewarding as it is. So I've definitely been looking to get into the options and things you're talking about. So I definitely appreciate you bringing them up. I have a lot of work to do, a lot of research to do moving forward.
Yeah, I hope that my arbitrage example made sense to people. If any of this doesn't make sense, call me out and say, Bennett, you sound like a lunatic, or Bennett, look at this point, because
Well, someone's asking about the fees, like to send stuff from one change to another.
Yeah, you need to factor that in. That is so important. And you also need to factor in maximum withdrawal. That's something that has hit me so hard before. Do a lot of research on 3 things: exchange fees, how much does it cost for me to buy and sell? 2, maximum withdrawal. So sometimes you can deposit as much as you want, but if you can only withdraw 0.1 BTC a day, you need to remember you can only withdraw 0.1 BTC a day. You can't forget that because that could wreak havoc. And then the third one is blockchain fees. So fees that it takes for me to send Ethereum or BNB from one exchange to another wallet or exchange. You got to take in those 3. The good news is once you start doing arbitrage and getting familiar with it, you'll memorize these fees and you'll memorize the maximum withdrawals and stuff. But do your research on that. That's beyond important.
Yeah, someone said there's a lot of with the alts. There's are much more arbitrage options, but the time coin send from none to another is mostly too long. That's what somebody commented.
Yeah, and that's exactly why I was mentioning my strategy before of using derivative products to hedge that in when markets are in free fall, if that made sense, guys. Basically, if there's like a 6% spread, you can short Bitcoin derivative like a perpetual and then long spot and then just close when they're equal.
Absolutely.
And when volatility dwindles is when they'll be equal. When the market stops.
Absolutely. When it comes back to equals.
Yeah,
absolutely.
Parity.
Looks like that's about it for all the questions here. At least up to date for now. Is there anything you wanted to talk about? Any links you want to put out to the people here? Or want me to post in the chat here? I'll get
Yeah,
the-
so I was showing you guys a lot of my LRA course. I highly recommend you go check that out. It has a ton of examples of trading setups, of also trading examples that you can gain experience through just taking a course instead of gaining experience through losing money. It also has a bunch of built-in strategies that you can adapt as well. I also have an options course if you want to take that route. And finally, I'm going to be coming out with my arbitrage course, which is a whole different kind of trading, but a kind of trading that the big hedge funds and guys who make a fair amount of money do. So we'll be coming out with that soon.
Yeah, I think I'll be checking that out. Where would one go to? Where do people go to find this information or to connect with you about your courses and everything?
Yeah, sure. My website is bitcointradingpractice.com. So it's just exactly that. If you spell all that in one line, bitcointradingpractice.com, and then enter, you'll see me.
BitcoinTradingPractice.com, guys. I'll post it in my Discord too. I'll tag everybody. For everybody who's here from my Discord, I'll post those links in my Discord as well. And the link to the YouTube channel itself is in the description to this video. And I also, in my channel, Ben, and I have channels that I associate with or follow, closely or learn from. And I'm building each of them their own section. So what happens is when they put out a video, I upload it for everybody in my Discord as well, so they're exposed to the material. So I started one for you as well. So after I just didn't post it yet because until you came on, like I said, I didn't tell anybody who was coming on today. Just told somebody. So I'll have a spot in my Discord as well where I'll post some information for you as well. And then when you put out new videos and things like that, I'll just go ahead and upload it so that everybody in the community can be exposed to the information that you put out as well.
Yeah.
One more question.
And,
sorry.
Yeah.
And then we have to, I guess the Google Meet call ends in 9 minutes. I don't have an upgraded workspace or whatever, so we have 9 minutes left. Is the FTX or other exchange reset when they buy or sell huge amounts of coins to balance their account still viable? I guess.
Oh, wow. We are getting very technical.
Yeah, this is above my pay grade, too.
You're probably referencing a past video I'd made called FTX's Algorithm Revealed, which is where I talked about rebalances of FTX leverage tokens. I don't really want to get into rebalances that much because that's going to be a long topic. All I will say, though, is that keep trading leverage tokens short term, and you shouldn't have too much to worry about a rebalance. And if you do think that a rebalance is about to happen out of your favor, then you probably want to exit that leverage token. So
That's cool. Yeah, someone said.
I don't want to get too deep.
Someone said Premier Crypto is just showing off with his question. Yeah, I don't know anything about that stuff.
Yeah, that's. I would love to answer that question, but that'd be more of a one-on-one thing, not an audience question.
Yeah, right. Yeah, it's cool. It just makes me want to learn more. It makes me want to really dive in. So yeah, Necro, you have any questions or anything before we wrap up here, Nico? If you're still there.
Yeah, I'm here. I mean, this guy Bennett, he's a legend in my eyes.
Absolutely.
I watched almost all your YouTube videos, so yeah, I really recommend everyone to look at them.
Thank you.
I'm reading that PDF, LRA. I mean, I'm 50% in, but yeah, nice stuff. Also recommend everyone to read that.
Yeah, absolutely. Ben, I'll post that. I can post that PDF for the guys in the Discord as well.
Yeah, but guys, I didn't write that. There are two LRA things. One of them, which is LRA by Tom Lexkey. He wrote that in 2017 on the Forex market. I adapted that into the crypto market, and I called my course Master the Market. And the website Trader sells my course Master the Market. And I know that I think you linked it below, my course for LRA.
In the I don't think I linked the course. Give me the link in our Discord chat, and I'll link it into the Discord. I'm not sure if it's in the YouTube video description.
I just sent it to you.
Okay. Let me look here. I'll have to bring it up in the Discord here.
Yeah, that's going to be your best resource for getting started in And
All
LRA.
right, bring this back up. So let's see if I can post it in the chat real quick. All right, guys. Yeah, it's posted in the chat. Just threw it in there a couple times. Spam my own chat real quick. All right. So yeah, Google Meet's gonna cut us in 6 minutes anyway. So good time to wrap up, guys. Good little hour and a half. Sorry for the technical difficulties in the beginning. I thought Zoom would be better. I guess Google Meet's where it's at for this type of stuff, but for some reason the volume wasn't linked. So again, Bennett, thank you so much for coming. Really, really eye-opening. You know, for obviously the viewers as well, and especially me, because I'm trying to get into the options and things you're talking about myself. So I think this was a really good push for me in that direction. So you know, thank you very much for taking the time out of your day to come on to the channel and to reach out to these new traders in the chat here and help us out. I really appreciate it. Thanks Nico for joining us as well, and Tiger for hooking this up. Linda, thank you very much.
Yeah, this was
Thank you,
great.
guys.
Thank you guys, and it was good to meet you.
Absolutely. Thanks, guys. So I'm going to wrap it up now. Yeah, Ben, I'll reach out to you in the Discord in a few and chat with you for a few minutes. And everybody else, going to end the stream now. We'll do some price action stuff in the Discord. I'm not going to do another stream. I'll just continue talking to you guys in the Discord about the price action. Still got some open trades open. Good day today. Made a couple 100% quick moves on SHIB for no reason, but we'll go through that in the Discord, guys. So thanks again, Bennett. Thank you, Nico, and I'll see you guys in the Discord.
Bye. Thank you, guys.
Have a good one.